I'm going to introduce, this is Georgina Owens, Chief Technology Officer of Liberis, Sid Joshi, Founder and Managing Director of FinTech Maximizers. What lessons did we learn from the pandemic?
Thank you. I think one of the most interesting ones for me that I've observed is the move towards contactless and the complete disappearance of cash. I mean, if I went around the room and actually asked you all to put your hand in your pocket and see how many of you are carrying cash now, it would be such a contrast to pre-pandemic. And I think what that's done in terms of business, local business, small businesses in particular, Liberis serves small and medium businesses, and I'm sure that how they've had to adapt to deal with that contactless world has had quite a big impact on their business model. So I think that's definitely one thing that's been interesting to observe.
Brilliant. So I would say we would need to divide the financial services industry into two sectors. One is banks, and one we have the fintechs. So the approach adopted by both these entities were totally different. So if you look at when I mean banks, what I mean by banks is large global organizations that provide multiple financial services such as asset and wealth management, retail and corporate banking, and other businesses. In terms of fintechs were very agile because we saw that they were proactive organizations that were already branchless, and they had already built those AI chatbots to interact with their customers. On the other hand, if you look at larger global banks, we realized that during the pandemic, a lot of branches were shut down. And then a lot of banks built those AI chatbots. So I would say we had reactive organizations and proactive organizations, Robin. So I think the proactive organizations definitely led the way in terms of managing better customer relationships and managing their cost efficiencies as well.
Well, what I'm wondering, though, is did anybody, I cited the example of TSB myself, but has anybody learnt lessons from what they had to do during the pandemic that they've carried forward that is making them a better institution, that is making them understand what they have to do to stay in business for the future in a better way than they would have done pre-pandemic, for example?
Customer comes first. I think that is the biggest lesson that organizations have learned, that you have to listen to the customers. You have to be there for the customers. And whether it's retail customers, SMEs, or large corporates, you have to be there, closely connected to them, listening to them, and innovating on a continuous basis, Robin. That's what I have learned. So, I mean, that's something which we've seen that's going to go forward as well.
Well, the clue's in the name of the sector: financial services. Service. Banking is a service industry.
Yeah, I agree. It is a service industry. And I think that what's interesting about the pandemic is that a lot of the financial organisations had to adapt their service model. I'm going to slightly disagree, because I actually don't think that they have necessarily learnt as much as they should have done. I think they and our two panelists earlier alluded to some of this. You know, it's very easy for them to refer to that as something we had to do during the pandemic, and rather than build on the experience and grow their plans and strategies based on the lessons learned, they've kind of slipped back into their old ways of operating. And I think executives who saw technology as being a bit of a saviour during the pandemic haven't necessarily continued to see it in that way.
All right. What was done at that time was done because it had to be done. People have not necessarily picked up on the lessons, taking them forward, but have wiped their brows metaphorically and thought, right, now we can go back to business as usual. Is this what you're saying?
That's what I believe, correct, yes.
But we have to still keep innovating. And we have to innovate responsibly. We have to invest responsibly. And most importantly, when I look at the world of financial services, banks and fintechs are data galaxies. And the abundance of data that they have. We may go back to the older ways of working, but on a continuous basis, we have to be agile. We have to keep innovating new products, add new features so that the customers are engaged and they keep working with the organization and continue to stay as our clients, as a matter of fact. So that's a continuous, innovation is a continuous journey.
Well, yeah, sorry, go on.
No, I was just going to refer back to the previous presentation that we had around value, and I think it's still really interesting how organisations view value to the business. And Alex said something earlier about being technology-led and not balance sheet-led, which I, as a CTO, of course, I think is absolutely the right way to go. But when you start to try and put value on innovation, a lot of the time that case is difficult to make.
Well, let's refer back to the title of this session. Is it all about the money? What you're trying to tell me is it's not.
I think if you are a forward-thinking organisation, you will see a little bit beyond just the money, and that you will consider other factors in terms of decisions that you make. However, you need to remain as an operating and successful business, so you have to have your eye on the money.
Some money.
You've got to have your eye on the money. Yeah.
No, I absolutely agree with that, because we have to, if you take an example of green finance or financial inclusion, these are some topics that you won't really think about money. You will plant trees. You will ensure that some customers are included in the financial system. And they may not be profitable for you immediately or on a medium-term basis, but these are things that we have to care about. We have to be ESG compliant. And I would say we should, as a profitable bank or a profitable fintech, we can't ignore the society. We can't ignore the climate. So, it's not always all about money. So I believe, I quite agree with what Georgina has said. Definitely.
Well, I want to say a couple of things about money myself. I'm sure people have noticed interest rates have gone up. How many times in the last few months? Anybody?
Depends on the country.
Oh, smart ass. This country. Don't be shy. How many times have interest rates gone up in this country?
3.
Yes, 3. 2, gone up to...
I think it was 8 or 10.
1%. Base rate in this country is currently at 1%. Money, therefore, is still relatively cheap. Even if you look in America, money is cheap. If you look around the world, money is still historically cheap. One of the issues we are going to have as an industry, looking at fintech, and it's going to obviously impact on banking, is that the tide is starting to go out. I'm not an economist, I'm not an economic forecaster, but I'll guarantee you this, interest rates are going to keep going up for a while. It's going to get more expensive. Money is going to get more expensive, which is why we need value for money, which is why we need also capital preservation if you've raised money. It's going to be tougher to raise money, it's going to be more expensive to raise money, and as the tide goes out, you're going to see all those people who've been swimming naked, and it's not going to be pretty. So how does the industry shake out in that landscape?
The exercise that we're going through as an organisation right now is really scrutinising very closely what we're doing and what we need to do. And I think in terms of ensuring that before we invest too largely is to have a set of hypotheses and test them. And I think that that's what we need to do more of. We need to be very, very, very quick at testing and trialling and establishing whether it's successful or not successful. And if it's not successful, don't be afraid to stop. I think the figure that was quoted was 150 billion wasted on failed projects. So it is about being agile. It's about being responsive and I think being brave around your decision making as well.
That's a very good question, Robin. As a matter of fact, we have to be cost conscious. We have to make our startups, make our companies, make our fintechs profitable in the next 5 years. So the way I would see it shaping is that we will see a lot of mergers and acquisitions. We'll see a lot of consolidation happening in our tech sector. And those tech companies that have always been cost efficient, they have inculcated the discipline and they have included the processes that have been agile and they have been innovative, they will survive. And that's what I see happening in the next few years, as a matter of fact. We will see a lot of consolidation, we will see a lot of mergers and acquisitions, and that's the way it's going to be.
Let me also come back to the issue of ROI. This was the subject of the presentation immediately before us. How do you define value for money if you're looking for a marketing return or a branding return? Establishing a brand, building a brand, growing a brand, improving the UX. You can't put a price tag on that immediately, I guess.
And I think that's what was really quite interesting to me in the previous presentation when that was referred to. For us, we're a B2B2C, so our brand is actually hidden behind our B2B partners. So we definitely can't put a value on our brand. So we have to establish our value in a very different way.
And that would be?
It's through our innovation, by embedding our technology within our partners' ecosystem.
True, absolutely. And we have to monitor our Net Promoter Score very regularly, because that clearly indicates how well do you understand your customers, how closely are you listening to your customers, and are you fulfilling their needs and wants. So clearly you need to closely monitor your NPS in the short term as well.
What happens next in the C-suite, though? Do we, issues about balance sheet aside, or whether you should be focusing on technology, the traditional role to the top in a business was from finance director to chief executive. Is that always going to be the case, or should there be a different man or woman at the top?
I think we're still a long way off of that. I think it's going to be a long time before...
Would it be the CTO?
No, I think it's going to be a long time. I think
How many CTOs here want to be CEOs?
Nobody. Wow. Okay. How many COOs want to be CEO? Does anyone want to be a CEO? So, yeah.
Who wants to be a CEO?
Nobody wants to be a CEO in this room. So I think, what we're seeing, there used to be that technology was hidden under finance, and then it kind of got out a little bit, and it started to get a seat at the top table. I'm seeing trends now where it's actually being hidden back under the COO. Unless you're working for an enlightened company, organisation where...
Oh, come on, this is financial services we're talking about. There aren't any enlightened companies in financial services.
Or in fintech, maybe. Maybe.
But I won't agree with Georgina there, because I believe that the CTO has the potential of becoming the CEO of any organization. The key thing is, as long as the CTO is not a pure play delivery person, the CTO has to be an innovator, has to be a visionary, who can see that the organization is, can see 5 years ahead of where it is now. And I believe the way the tech industry is developing and shaping, and we have some amazing visionaries and innovators. And I think some of the CTOs are already CEOs, because they start off and they incubate new companies and build new products. So I wouldn't be surprised to see many CTOs becoming CEOs in the next few years, Georgina.
Yeah, I know, but I'm going to say something now which I, as a CTO, probably shouldn't say. I have a lot of CTO colleagues that don't want to come out of their technology cave. There's also quite a lot of founders who are technology founders who make very bad CEOs. So I think it's an interesting question and not an easy answer.
This is still all about the money, because one of the problems in that decision-making suite, in that level, is that they don't necessarily get what the opportunity or the danger is. And it's too easy to get seduced by somebody selling you the next shiny thing, which kind of goes back to the amount of money that's being wasted on cancelled projects.
Yeah, absolutely. And I think in large enterprises, that's much, much worse, and made worse by some of the big consultancies who manage to come in and get in at the board level and do sell the next shiny thing and make sure that the on-the-ground IT organisation don't get anywhere near to it until it's too late. And by that point, there's been an awful lot of money that's been sunk into what will normally turn out to be quite an unsuccessful project.
Yeah, that's quite sad, actually. That's right. I quite agree with Georgina there. But I think the board must understand that a digital transformation is fundamentally a business transformation. Because whenever you design, develop, build, or implement a technology solution, you're actually impacting almost all lines of businesses. You're completely changing your organization. So it is important that the board understands and appreciates the risks associated with a large-scale digital transformation. And I think the journey of educating and informing them about the change leadership aspects of the technology implementation play a very important role to mitigate those risks.
3 ways of doing it: buy, build, collaborate. Which one gives best value for money?
I think that it all depends on what you're doing, but I think the most important thing is that you ask all those 3 questions before you make a decision. So I've worked in an organisation where it's just build, 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 no matter what, and where there's been instances where actually you could go out and you could buy, and it would have been a much better decision than just trying to build it yourself. The collaborate thing is quite interesting, especially in the current marketplace where we have some really big challenges around getting hold of technical resource. We know that everybody knows that the market's booming at the moment. How long that will stay, we don't know. But I think probably every CTO has the little purple ring around them on LinkedIn because we're all recruiting, and so we're fishing in quite a small pool. And I have 4 small companies that I partner with for specific areas where I need resources, but I'm doing it in a balanced way whilst I'm also looking to protect the intellectual property within my team and holding on, to knowledge in the right areas.
Because you don't want to expose them to some big nasty bank who might pay them lots more money, is this?
So I think for all the product innovators, product managers, and developers in the room, I'm sure you love building your own products, right? You love designing, developing, and coding and building your own products. So I would say, I think the product innovators, the developers love building their own products and think out of the box. But we should have an open mind to explore other products that exist in the market. So, because we may, as an individual, as a CTO or a product innovator or a product manager, I may not be able to build all the products to satisfy my customers' needs and wants. So somewhere, I think there's a blend of building your own products plus buying an external product which would fit your requirements. In the AI space or data and AI space, it is very important to co-create or co-innovate with your clients or with the organization, because the data is with the banks, the data is with the fintech companies, and it is good to collaborate and co-create the solution together, because you're building those predictive AI products and the predictive solutions. And those are very intense projects. So I think my advice would be that it is best to collaborate and co-create and build those solutions.
Are you talking from the fintech perspective or the bank perspective when you say that, though?
For me, banks and fintechs are both data galaxies or data universes. So my view to these organizations is that they have structured data, unstructured data, labeled data, unlabeled data. And how do we use that data to deliver value and make those predictive solutions? So Robin, I would say if you have a data-driven view to the organization, then you don't differentiate between those two. So,
Well, I'm kind of differentiating because I'm conscious that the overall theme of this afternoon's event is how not to break the bank with tech strategies. So I want to look at it take it from the bank's perspective, because I guess, I don't know how many of you are bankers here, but I would guess that whoever's here is a banker, you're going to be outnumbered by the number of people who are here from fintechs. So from a banking perspective, from the banker's perspective, I look out at this sea of hopeful fintech faces. I need to decide, do I want to buy their services? Do I want to poach their staff and build it myself? Or do I want to collaborate, co-create, possibly, depending on the kind of fintech I'm talking to, go into the awful portmanteau word of co-opetition?
I've not heard of that word. So,
A new one on you?
yeah, I've not heard of
This is something I've seen. Is it new on everybody else, or have you heard this before? Co-opetition? It's a portmanteau of cooperation and competition.
Okay. Right, big banks then. We're looking at the big bank view of...
Tier 1, Tier 2.
Okay. Buy, build, or collaborate. Well, I think it was said earlier that the big banks are spending 85% of their time on maintenance, 10% on compliance, and 5% on innovation. So they are going to have to be looking at buying or collaborating, or outsource the maintenance and then try and redirect the resources onto new builds. But then, of course, there's probably going to be a bit of a skill issue, because I would imagine that most of them are going to be based on legacy systems.
There's that dreaded phrase, legacy systems.
Legacy systems in data. In fintech, we don't have to worry about that. We're all in the cloud. We're fine. Everything's fine. But the reality is, for the big banks, they still have to deal with that.
Well, this is another way of putting it, is technical debt. Does that cause problems other than taking up most of my? If I'm the CTO of a bank, it's going to take up most of my budget just keeping the lights on. It's been said before. What about that versus agile? Can I be agile at the same time as managing all that tech debt?
I mean, tech debt, I don't want to say that 3 times. It might sound a little funny, but tech debt is a big problem. And whenever you're building or designing a product or a solution, you need to keep it simple and make it work. You need to decide what are the features and what are the functionalities or capabilities that you want to include in your product, and start by keeping it simple. Because over a period of time, this will become an avalanche. It will be very difficult to manage. Say 5 years down the line, you have a product which many people have touched over a period of time. There are many programmers, many coders who have changed the code, and if there's no discipline in managing your code or managing the development exercise, it can become a big hassle, and many things that get impacted because of that. Because the teams get demotivated. The future people who join the organization to work on that product, they get really demotivated. So it is very important in the beginning itself, when you start designing and developing a product, that you start monitoring and ensure that you reduce the tech debt over a period of time. Otherwise, it becomes a very difficult problem to manage. Maybe, Georgina, you can share your personal experiences.
Yeah, well, interestingly, a lot of startups, when they're building their first products, build tech debt from the beginning because they have to do it relatively quickly. They're still testing the product, and so, you know, and it'll be a small number of people that will all be mucking in and doing as much as they can. And so then when they start to get to scale up stage, then they have to have a look and suddenly realise, well, actually, believe it or not, we built some tech debt in the very early stages, and now we've got to refactor to allow us...
Because we can't scale it up.
Because we can't scale it up, yeah. You know, and people don't... I don't think people think of startups as having tech debt, but, you know, I do have tech debt to deal with. And now that we're going to the scale-up stage, which is a real difficult time in terms of investment, because we're probably not growing quick enough to have the size team that I ideally would like to have, to be able to replace, you know, what we've built already. So I'm managing the new build alongside the old build, and trying to do it as quickly as I possibly can, and not being the miserable one in the corner going, oh, but I can't do it because, yeah.
And agile, the beauty of agile working is that whenever we are releasing a new feature, you know, I think the frequency of release of the feature has improved. So every 2 weeks or a month, we can release something new for the customers. We can have some add-on features like add a nominee or add a payee, and some kind of innovative features that we can keep adding. So the good thing is, with agile working, we can keep innovating, keep releasing those innovations to the customers, and that also gives a very positive view about the organization to the customers. And the customers know, okay, that's a very innovative fintech company, or that's a very innovative bank. So I think agile working is much better than the waterfall model that we used to have earlier. But the agile model is amazing, and I think that's going to stay for a while, for sure.
Now, I'm going to ask you about AI, because you wanted me to. So, artificial intelligence and what AI can do in this circumstance.
In this circumstance?
Well, yeah, not that specific issue, but within seeking value for money, within getting the implementation of technology right. That's why I asked.
That's a good one. That's a really good one, actually. So I think the starting point of AI is data. And let us explore how we can use AI to solve Georgina's problem. Like let's put it this way. So I think it is important to capture all the data points that your team is currently, for example, number of keyboards that you're typing, or number of implementations that you have in your, number of releases that you have, number of changes that you've made. So once we gather this data, we can use predictive models to help you decide what feature to add next, or what change to make next. So AI is, so we have to build a decision-making system for you, where you are not hassled by continuously managing the teams and monitoring the teams and keeping a track of all those aspects. Because fundamentally, AI, we have been automating the repeatable tasks, right? Like most large organizations have almost 30 to 40% of the tasks which are repeatable and they're RPA based. But can we build those AI solutions to help you in the decision-making process, which is where the hassle is? So that's where we have to keep capturing the data and plug in a good machine learning model and see how we can do it. So I mean, we'd have to do a POC on that, Georgina.
I'm very cynical about this, and when we had our pre-meet, we started.
You said exactly the same thing.
Yes,
you said you were very cynical.
I'm very cynical, and I'm still very cynical about it as well. I think AI. I can remember being on a panel probably 5 years ago talking about AI being the next best thing and how it's going to transform and do all these amazing things for us. And I'm still waiting to see it, I'm afraid.
But Georgina, I mean, if you look at the hedge funds, for example, right? I mean, today we have a lot of computer scientists, we have a lot of AI, machine learning engineers analyzing exabytes of data to come up with great returns on the investment, right? And that's a great benchmark and to see how robots can actually give us those returns. So why can't we use some of those models in our risk analysis and predicting the default for SME customers, because data is power, data is is money in a way, but how do we use this data to predict whether we should give a loan to an SME or not give a loan, and what is the probability of defaults? Are they 30 days past due, 60 days past due? So all those things can be done by a machine. And when we see that this is actually happening in the world of financial services, then we can learn and exchange the best practices from each other. That's what I believe.
And we're doing that. And I don't think, though, in terms of the way that we're doing it and the models that we're building are really anything more than what people have been doing for a long time anyway. So the smaller AI in the smaller companies, I guess, yes, it's the real bigger stuff where you start making claims of AI helping you to make decisions, and I think that's really where it starts to, where I'm become more cynical about it.
We shall have a conversation later.
Well, I'll let you carry on that conversation later. Ladies and gentlemen, I'm going to wrap it up there. I'm going to assume there are no questions because the drink is available now. Oh, no, there's one at the back. Do we have a microphone for the young man?
Or shout, that's fine.
Oh, I can grab yours.
No, a man is advancing upon you.
Thank you. Oh, thank you so much. Yeah, my name is Sonny, member of Level 39. Thank you for the brilliant presentation. I have this question. Is it all about money? So my question is, will the fintech consider transitioning into commodity tech? Our reason is this. There's a lot of geopolitical issues happening right now. And we've seen customers from the banks, so who always believed in the money, like the currency. And Robin mentioned, like inflation, interest rate. And sadly, you said it's going to continue to increase, and then money is going to become very expensive, and which is true. Now, we've seen people rematerializing their financial assets simply because of the quantitative easing that many countries have been involved. Because once they increase the interest rate, it has an effect and a negative impact on people's saving. So people now are, I'm not saying they are losing interest in the currency, but people are looking at commodities, taking their financial asset and reinvesting it into stuff like gold and all those things, just to wait until this whole thing is gone. So will fintech consider transitioning into commodity tech? Thank you.
Can I just ask you to clarify one thing for me? What do you mean by commodity tech?
Yeah, commodity, I'll give you a practical example right now. Sadly, we have this issue going on in Ukraine, and then we've seen sanctions. We've seen how countries have been reacting in the United Nations when they have to vote for sanctions and all these things. And we've also seen that countries that have commodities like energy, gold, and all these natural resources, so because they have those resources, so...
Can I just stop you there for a second? What is commodity tech? You actually haven't answered the question I asked.
Yeah.
What do you mean by commodity tech?
Yeah, because the fintech, they build services around the money. So, and then banks uses the money. They use currency.
What are you going to use to pay for the commodities with? If you're asking an audience of fintech players, why are you not doing something about commodities? Are you asking them to build a platform that trades commodities? Are you asking them to build a platform that identifies where there is a surplus of commodities? Is this what you're asking for?
Yeah, that's what I'm asking. Also, we've seen that the major trading currency like dollars, pounds, and euros are actually plummeting because of some geopolitical issues that I'm not going to mention here again. So, and they've built the entire fintech is around those global currency that banks use. How are they going to transition now that the customers are shifting? No longer using...
They don't have to transition. At least I would say they don't have to transition. Money, and I am not going to burst into 3 quick choruses of Money Makes the World Go Round from Cabaret, which is great for you because I have a singing voice like a corncrake. But money is what you use to secure your investments. Now, whether that investment is a bond, a stock, a commodity, does not matter. Money is what you use for that investment to change hands. Are people looking at commodities? I'd be very surprised if they weren't. There are countries out there who've been worrying about food security for years. The rest of us are just waking up to the fact that we were only a short special military operation away from worrying about food security ourselves. Do either of you want to add anything to what I've said? Anybody else? Gentleman towards the front. Microphone's coming.
Thank you. Question for Georgina. It's not about money, but it's about technical debt. So if you were to start building Liberis from day one, ground zero, tomorrow morning, your development resource, what percentage of that would you assign to technical debt so that when you came to scale up, you weren't faced with issues and you could rapidly scale into new territories, markets, etc.?
If you had it to do all over again, what would you do different?
How would you do it better?
I can answer that because it's a constant conversation. I would love to always assign 30% of our time to looking at technical debt and all things that fall into technical debt. So I am constantly trying to hold back 30%. I fail miserably every single time, but I will not give up
On
the
average,
fight.
10%?
It depends on the sprint, if I'm completely honest. It depends it depends what the pressures are. Yeah. I mean, at the moment, actually, we're currently in quite a good place because we've just completed some really, really massive deliveries. And Klarna, who was mentioned earlier, is one of our partners, and we've just gone live with a full embedded journey with Klarna in Sweden. And on the back of that, we've recognised the pressure of doing that, and we're taking a bit of a pause, and we're actually putting a lot of time into technical debt at the moment, just purely because I don't want to kill everybody in my department. So I'm just saying, let's step back and breathe a little bit before we go into the next wave of enormous
Next
deliveries.
phase of innovation.
Yeah.
Thank you.
Any other questions? Because I want a blasted drink, even if you lot don't. I will just leave you with this one thought, and it's a very old joke about the young lady who married a computer program developer, as they were called then. And they went off on honeymoon, and she came back from the honeymoon and was taken out, and it's a 1980s joke, she was taken out to a wine bar by her friends, and over a bottle of Chardonnay they said, well, how was it? And she said, I don't know. And they said, what do you mean you don't know? You've just been away on honeymoon. And she said, well, all he did was sit at the end of the bed and tell me how good it was going to be. Thank you, the 2 people who laughed.